All right, guys, Will Beach here, and I'm just shooting a quick video to show you that Netflix could have been predicted on this downward crash. Um, when you're doing technical analysis, things that have a massive effect on technicals are catalysts, and catalysts like earnings report uh, pretty much does the trick for you. So were there indicators showing Netflix was going to crash before earnings actually hit? And the answer is yes. So even with positive earnings, yes, they missed, but they have they still did good prior to last earnings report. But when people don't get what they like to see mixed with the indicators, then you get these big downsides. So what I'm going to show you is this daily chart. In the daily chart, we capped out, a few weeks ago at 423 as the high. Then we went into started to enter into what would be consolidation. You can see that here between these support and resistance, Fibonacci, and as well, you can see the Bollinger Band starting to tighten up. So that was the indicator that we're going into consolidation. Whenever you have consolidation, that's when you're set up for big breakout moves, whether to the upside or downside. So on the daily chart, we can acknowledge that we've entered consolidation, and then we can also see by the indicators that we were going down. We have the ADX that was going down, MACD that was going down, momentum that was going down, and stochastic that was headed downward. So all the indicators are showing downward movement, which is consolidation. That's what you see when they move in sync like that. That's actually consolidation. But where did this big drop happen? Well, the catalyst of earnings is the what gave us this big drop. But check out the 4-hour chart. This is where it really gets ugly. So 4-hour time frames, you can see that we knew that this downside was coming because you can see it all happening right here. And 4 hours is what I trade on. Daily is what I confirm whether the trend is up or down, and then the hourly or 4-hour hourly is where the entries come into play. Okay, so on the 4-hour chart, we can see that we entered the consolidation channel, but again, everything was headed downward. That you can see here: ADX, MACD, momentum, and stochastic. But here's where you really knew that a big move to the downside was coming. Okay, so we entered this little bit of consolidation, and the MACD is still below. The momentum goes to below zero, which is a big negative side. Stochastic has moved, was in this mid-range, moving downward. And then here's the kicker, and I've taught this in many of my other chart analysis. The ADX started increasing right in this time frame here, which was last Friday. I'll enlarge that. So last Friday, which was this area right here, gave you all the confirmation that it was not headed in an upward position. And again, it would have just consolidated, but when a catalyst occurs, it pushes it, higher volume in the direction that it was moving already. So what we're looking at is this MACD is headed down. It crosses below zero. That's a negative. While the ADX is increasing, the closer ADX gets to 25, the more momentum it's going to go in the direction of the MACD. So you can see that these are almost identical mirror images, and this is the setup that you want to avoid for downside. You never want this to be a mirror image. That's why I keep them next to each other. Even though I look at stochastic, MACD, momentum, ADX, when I'm looking for the positive upside, I like seeing these next to each other, because when you get this mirror image, that's a very, very bad sign. And you could see it start back here early Friday. That's just not a good sign. So then it continues, and then you can see it starts to level out. And then what happens? We get our earnings report. and there's the breakout. That's the catalyst that pushes it over the edge. So could this have been predicted? Yes, it could have been predicted. This should not have been a trade that you get excited about. Secondly, besides the fact that the indicators, all showed that it's just not, everything has been going up for the past few years, especially on the tech sector, that as they keep hitting highs, you have to be a little more cautious on, well, when's it going to dip and how far is it going to dip and how long is it going to dip for? Because if you're buying at these highs every time, you're going to be stuck somewhere. If you would have bought 423, you would have been holding weeks, hoping to get back up there, which it never did. It got close, never did, and then started its downside. How long do you think you're going to have to wait now before it builds back up? I'm not saying it's not going to get there, but for people who do momentum swings and trade and breakout trades and these swing trades like this, their goal is not to stay in the market for a long period of time. And when these moves happen and you got stuck in it, that just forces you to either eat a big loss or stay in the market a lot longer than you anticipated. To get a bigger overall view, I'm going to go check out the weekly just to see where we're at. You can see we're touched up here on the high. We started curving over. We're kind of along the nine moving average on the weekly. ADX is really high. MACD starting to curl over. Momentum has begun to drop. It still waves just like everything else, but here was the peak. Now here is the peak, so it's lower. Stochastic is dropping lower. Here was the peak. Now here's the peak, so it's a downward cycle. So the weekly is going to start curling over. I'm not saying it's going to drop massively because it's going to, based on this, it's going to move in tandem. They're all going to move at the same rate, downward, which gives you a consolidation. So unless something major happens, it's probably just going to consolidate a little bit within this channel. Well, it's actually down here in this 360, I think. Let me go back and see where it's at. 343. So it's actually bouncing right off of this retracement level. So if you're wondering if Fibonacci retracements work, the answer is yes. And that's just visual proof right there that when we set this up, that it landed right on a support level. That's not coincidence, but now typically what happens is you see this long tail. It's going to keep chasing that tail until this thicker part almost touches right here. So I mean, it's not even close yet. It's going to take probably a week or two before we even see any type of 4-hour consolidation. But something to keep an eye out, because we know that when they bounce back hard. And now, though, the problem is that this is the same thing that happened at NVIDIA a couple weeks ago, is this daily is going to be below the 50-day. And now the 50-day is going to act as resistance. So as it starts curling over, toppling over this way, as it drops down and tries to rebuild, it's going to have trouble. It's going to keep bouncing off it, which is probably going to be around this 378 level. But again, that's just something, that's speculation. You got to wait and see what it does. But that's what I would guess, is it's going to be trapped in this channel here for a couple weeks. Anyways, I hope that helps out. So the answer is, whenever you're coming up to a catalyst like earnings, really do a good job at chart analysis to know that if you're in that trade, if it's worth staying in it or not, because that's when big moves happen. Because if that catalyst wasn't there, this would have been a normal consolidation channel. But the fact that it was on the downside, getting ready to hit this bottom Bollinger, and then a catalyst happened, it amplifies it. So I hope that makes sense. So even though it was entering consolidation normal, hit this catalyst, and that's when it went ahead and said, see you later, I'm going to go much, much further than I originally anticipated. So I hope that helps again. Subscribe if you haven't subscribed already, and keep studying, keep trading.